Welcome back in. It's time to talk about your money here on Monday, Tuesday. One of the biggest frustrations for those of you who try to been saving over the past year is the reduction in the amount of interest that you've been receiving in your checking and savings accounts. It's not a tremendous problem in and out of itself, but the recent concerns surrounding inflation, though, exacerbate the problem when potential losses of purchasing power add to the equation. So what can you do? Well, joining us this morning is Marshall Clay with the Welch Group to give you some advice. Marshall, good to see you this morning.
Hey, good to see you, Mike.
We were just talking during the break, though. Interest rates crept up a little bit over the last few months, and so maybe some people are seeing a little bit of a bump in their savings rates, but, inflation certainly offsets that, does it not?
Yeah, it does. And I think, the rates that we've seen going up are actually the 10-year U.S. Treasury. We haven't seen a whole lot of movement in those short-term rates that are typically set by the Federal Reserve. Mm-hmm. So obviously, for your viewers, they obviously want to keep enough emergency cash set aside, but if they find themselves having a little bit of excess cash, it's worthwhile pursuing some of these alternative strategies to get a bigger bang for your buck.
All right, let's start with some of those alternative strategies, including maximizing the tax advantage accounts.
Yeah, so we've talked about this a lot, and I think this is very important for your viewers to try to take advantage of all of their, their company 401k options, their pre-tax traditional IRAs, and even their after-tax options in those Roth IRAs. I mean, when you put money into one of those pre-tax accounts, you're getting a guaranteed rate of return based on your marginal income tax rate. So if you're even in a lower tax bracket, you're getting a 10 to 12% guaranteed rate of return on your money, which is 10 or 12 times what you're getting in a checking and savings account. The second thing I would look at is paying down, that variable rate debt. Credit card debt is sort of public enemy number one, but I know there's a lot of people out there with student loan debt, even mortgage debt. I mean, I know mortgages are really, really low right now, but, even 2 to 3% on a mortgage is much higher, than the current rates that you're getting in those checking and savings accounts. And then last but not least, and this is a little bit more of an advanced strategy, but this kind of coincides with the increase in home values that we've seen, is utilize home equity lines of credit, right? If you've got equity in your home, go out and see if a bank will open up a home equity line. That will allow you to hold a little bit less cash because you're not losing any liquidity. You've got the home equity line to back yourself up in any emergencies, but utilize that excess cash to do some of the things that I just mentioned.
Marshall, real quickly as we wrap up, we know there have been a flood of refinancings because of the low interest rates we've had over the last really couple 2 or 3 years. So if somebody's refinanced, though, they still have equity in their home, if they have some debt they want to pay down, would a home equity line of credit be a smart move? I'm talking about credit card debt.
Yeah, absolutely. So, I mean, if you've been able to refinance in the last 6 months to a year, I mean, your rate on a 30-year fixed rate is probably somewhere around 3% or less. I mean, on variable rate credit card debt, you're looking at probably 17 to 20% if you're rolling that over month. So if you've got the ability to tap into an equity line or something like that in order to pay down that debt, I mean, you're trading 3.25% debt to pay down 17% debt. I mean, the spread on that's pretty astronomical. So I would recommend your viewers definitely look into something like that.
All right, Marshall Clay with some good advice about your money. Thank you so much, Marshall. We appreciate it.
All right, you're welcome, Mike. Have a great day.
All right, still ahead now. We got the Good Day Buzz and what you need to know about an upcoming